So thank you everyone that's joining today's session on the FCC changes and the impact on customer acquisitions. We've done 2 sessions previously on this particular topic, and today is session number 3. We're super excited to do this session with actually more guests than we've had on any of the previous webinars. Thanks for joining. Quick introduction about myself. My name is Bas Offers, and I'm the Chief Operating Officer at PX. We'll focus today's session. We're going to do a little bit of a different twist on today's session. Actually, before I go to today's session, let me do a short, super quick recap on what we've done so far. We've done session number 1, where we've actually gone over all the proposed and accepted changes that are coming in January 2025 and the impact of it. We did a deep dive with Michelle Schuster on that. In the last session a week ago, we did a real detailed breakdown on where we believe the impact will be for mostly on the publisher side, but also on the buyer side, on what it looks like in terms of the different flows that can be accepted starting next year. And today we're actually going to talk about the fact that some of these changes are not as big as some people believe they are, because actually some of these changes have been incorporated by many companies already in today's industry. Again, the way we're going to do it, we're going to do it in a very pragmatic way. We don't have all the facts straight today, so please do keep us honest, provide a lot of questions and whatnot. We want to make this a super engaging session. But the theme of these webinars is that the sky is definitely not falling on lead generation. And we've gone through this before. And as you can see in today's session, actually many companies have already figured out how to navigate some of these challenges. Before we do a quick recap of the last sessions, I want to introduce my good friend, Eli. Eli, I'll pass it on to you, and then we'll go to the next slides from there.
Thanks, Bas. Appreciate it. And thank you all for joining us yet again for the 3rd installment here of our webinar series. My name is Eli Schwarz. I serve as the Chief Strategy Officer at Verisk Marketing Solutions. We've been having fun with these series so far, and a lot of good interaction and participation from all of you who have been joining us. So we'd love to keep that up. And Bas, if you could jump us to the next slide, just want to remind everyone how the question and answer chat function works here. You can directly add questions as we go today, and we'll be able to see those and try to address as many of them as we can live during today's webinar. We'll cover them, we'll come back at the end and try to cover anything we don't get to during the session. And we are, of course, recording this webinar as we've done in the past, and we'll share that recording out after the webinar is concluded. In the past 2 sessions, we've received, I think, almost 100 questions in total throughout. So we've been capturing these. We've been working in the background to try to document answers to everything that's coming in. So, for the questions that we didn't get to live in part 1 and part 2, and for the questions that we don't get to live today, we're compiling answers to all of those. And we're actually planning now to come back with a 4th installment of this webinar series, where we look to address all of these questions and try to answer everything that's been coming up that our audience and attendees have been asking of us. So be on the lookout for a date for that next session. We'll be pushing that out soon as we have it all planned and ready to go. And then I think we'll also probably solicit more questions and commentary from everyone ahead of that if there are topics that we haven't fully captured yet. So more to come, and hopefully lots of engagement here today from all of you. As Bas just mentioned, today is the 3rd installment here of our series. So we spent session 1 covering kind of just the facts of what's changing with the FCC's update, what's to understand about the legal implications, and we have Michelle Schuster join us to offer expert, kind of legal opinion and guidance from her perspective, which was very helpful and raised a lot of additional questions for us that we're hoping to step through in the coming session as well. In session 2, we did a deep dive into one-to-one brand consent and the solutions that we're trying to bring to the market to help everyone better comply with one-to-one consent. And then today, we are joined by some special guests that are going to step us through the approaches they've taken as brands and as lead buyers to actually solve for compliance and consent here. So excited to learn more from our special guests. I think, Bas, I'll let you get us into introducing the team here.
Thank you. Sorry about that, guys. I couldn't find my mute button, so we're back in action. So in order to do that, let me jump actually here, and then I'll actually go to the agenda. So actually, let me actually stop sharing my screen so people can see our guest of today. Maybe Matt, you would be able to introduce yourself and then pass the torch to Gabe.
Yeah, sure. Hi, everybody. Matt Curtis. I lead what's called media strategy at ADT. I have been in the ADT ecosystem for going on 16 years. First for a long time at ADT's largest independent authorized dealer, and then via an acquisition now working over at ADT. For a long time ran ADT's third-party lead channel, and then have transitioned over to lead the media strategy piece, which is kind of the broad project-based cross-channel media projects. So, and I'll toss it over to Gabe.
Yeah, thank you, Matt. And thank you, Bas and Eli, for having me and inviting me to this, and for all the great work you've done with the first and second session. They were actually very helpful for myself and my compliance department. My name is Gabe Allen. My title, I'm CEO of Royal United Mortgage. Royal United is a direct-to-consumer mortgage lender. We have about 350 people. I started off as a loan advisor in 2009, right after the crash, and after leading multiple sales regions, took over our lead buy and marketing in 2016 before transitioning to CEO in 2021. So really excited to be with you all here today and talk about this important topic.
Awesome. So we have a lot of combined years here in terms of our guest, in terms of experience in the industry. So we're definitely going to use that as well to do a short look back. Let me take over my screen again in terms of sharing the quick slide. And I promise it's going to be quickly going through the slides, because what we want to do now is do a quick, short summary of session number 1 and 2. As we mentioned, session number 1, we had Michelle Schuster from Amazon Law that joined us and really gave a deep rundown of the history of TCPA since 2015 and the changes that we've seen over the years, the impact of the changes that will come, but also she already mentioned some of the alternatives in terms of not using an ATDS dialer, which we'll definitely jump into today. And the last session, it was just Eli and me walking through some of the solutions that we think the market will head towards too. I'm gonna skip this one because I want to use the time of our guests much more than repeating everyone again. But the important, just one bullet that I want to highlight is the implementation date where everything needs to be in effect, which is January 27, 2025. When we did session number 1, that was not known yet. So really an important date to circle in your agenda to make sure that changes are into effect at that point. Eli, back to you.
Sure. And then so a couple of the core topics we've covered in terms of what we're expecting to come as a result of the FCC's updates. First and foremost, and we've spent a lot of time on this, is innovation around procedures to capture and collect one-to-one brand consent. We focused a lot on that in the last session. We're expecting to see a lot less generic lead forms that exist in the market today, and more of a shift towards exclusive campaigns. And I think we'll hear more about that from our special guests today as we go. And then also more multi-brand brand flows. So experiences where where multiple brands are named and presented to the consumer in order to capture that type of one-to-one consent in the process. And then, of course, we're focused really on providing technology solutions that can help automate and simplify the way that these types of experiences come together. So as we get further into PX and Verisk Jernaya's role, that's really the kind of role we're trying to play, is to help simplify everyone's process for implementing and complying with the new regulation. We've also touched on one of the changes that we think will become more likely as we get into 2025, which is the ability for end buyers and brands to simplify compliance with their lead sellers by operating with one core approved TCPA disclosure. In the instance where a publisher or a lead seller is displaying a brand-specific disclosure, the brand will likely be able to have more control over the entirety of that disclosure versus needing to operate with lots of different iterations of their approved language across different providers and companies. And then, of course, there's an expectation that we'll see more transparency and kind of centralized management of vendors from the buy side. So buyers are the ones who take on the responsibility to ensure that they have this type of one-to-one consent for all of the calls that they place, and we think this will lead towards even more transparency into what publishers are doing and centralization of the way those relationships are managed to ensure compliance. And then the final point we've touched on a bit is we expect to see more brands or lead buyers focusing on kind of avoiding their activities falling under the definition of that ATDS and using manual dialing practices, compliance with the DNC checks at the national and the state level. So it'll be interesting to dive further into that. I think we also have some expertise and knowledge on the call here today to explain some of how those practices are being implemented in our current state even.
And then 2 slides to touch base on the topic on how both Verisk Marketing Solutions and PX can help simplify the process. We actually didn't touch base on this, but I found out that many people found out the color coding on this slide actually represents either PX or Verisk Marketing Solutions, and where we can actually play in a role, and most importantly, an integrated role within the whole process. So these are the 6 key points that we feel will be required in one-to-one consent, and especially when there is actually a verticalized lead form that's unbranded, where the consumer goes to that form and where the matching gets done to provide the options for the consumer. And it starts really with the ability for a publisher to do matching with the right brands on the back end, and to really simplify the process and how that's being done, and then showing those matched brands back to the consumer and give them the option potentially to select which brands the consumer wants to interact with. Obviously, capturing the consent is going to be critically super important to make sure that nothing changes in the way how we operate today. And then really making sure as well that the lead is actually being routed to the brands that gave consent, which will require some changes for many players in the industry. The exciting part is that this also provides opportunities in routing leads in different ways, leads with one consent, leads that do not require it. So we're going to see quite some different campaign strategies on how that will be done by many of the brands. And then obviously, as I mentioned, the proving that there has actually been compliance and opt-in provided by the consumer, that they stated that they agree to the disclaimer, will all be taken care of. And we summarize that in different flows. Those flows we have outlined on the website. I believe actually that link is actually being shared in the central chat. So if you want to check it out, please follow the link either quickly during the session or after the session. And if there's any further questions, happy to address on it. But those are the most likely scenarios that we perceive to be implemented in industry. Without further ado, this was the summary that we wanted to go over to provide the right context and frame what we want to talk about today. And obviously from here on, we want to spend some good quality time with our guests and ask them questions and understand how they're thinking about navigating this. And I wanted to actually kick it off with Matt Curtis with a question, knowing that you've been in industry for so long. We've seen quite some changes over time. We've seen changes in terms of TCPA. I just want to ask you, what do you remember of the implementation of TCPA in 2015, and how did it impact everything for Defender at the time, how you guys were operating within the space.
Yeah, I think it's interesting, right, to think back because we've had a lot of changes, and I think each time one of these changes has come along, a lot of the perspective in the moment is that it's going to be, like a critical hit, right? And ADT, I'll say this, we've always taken a pretty conservative approach as it applies to consent, but things like singular consent, ADT being listed in the TCPA disclosure, TCPA above the button, each one of those things at the time, I think, we thought it would adversely impact things, and I got to be honest, is really we haven't seen that. We've largely moved to branded flows. We've largely moved to 100% branded experiences with the same, you mentioned or Eli mentioned, having consolidated TCPA language. That's something we do. We apply that across the board, right? And I think for us, it's been, something that's established sort of consistency across the board across our lead programs, and has, we know what we're getting through that lens, and it mitigates some of the risk.
Thanks for that. Gabe, do you remember the time TCPA was implemented for Royal United, and were there any significant changes actually for Royal United at the time?
Yeah, I certainly remember it. I was not responsible for our lead buy at the time. It didn't have a large impact on us at the time, being a 100% consumer direct lender, only purchasing leads from lead providers. We relied on them to make the changes and just make sure that we were compliant with them. So very little, if any, impact on us at the time.
Awesome. So maybe nice to actually understand, Gabe, how you guys are operating today. So maybe we can actually take it all the way from a lead that comes in and what you guys do with that lead, because we've talked a lot about auto dialing and the use of ATDS, but what's so interesting, I think, to share with today's audience is how Royal United has been operating, which seems to be pretty in line with some of the alternatives that we discussed in previous sessions as well.
Yeah, absolutely. We are a 100% manually dialing company, and we always have been. I will say we have explored the use of auto dialers 3 separate times, and in all 3 cases, our people unanimously that were a part of those tests decided that they wanted to go back to manual dialing. And the primary reason being is that they're faster when manually dialing versus auto dialing. And they also felt like they were just more engaged, and it was easy for them to drift off or, start using their cell phone, which steals money, versus, their desk phone, which makes them money. And we get paid ultimately when we help customers, and we can only do that when we're dialing telephones. So we have an open lead queue environment where there is no prioritization or lead routing for any individuals. It doesn't matter whether you've been here 10 days or 10 years, you have access to the exact same leads as long as you are licensed in that state. Or, there are some states that have certain restrictions. Outside of that, everybody has access to the same leads, and it is, survival of the fittest, right? So our people go after them. Some of them work at the brand new leads that are coming in, and we are only purchasing 100% real-time leads. We don't deal with trigger leads or age leads in any way. We have some people that go back a day, 7 days, 10 days, 30 days back. But they are going after it all day, every day, and we know that whoever reaches that customer first has the best chance to convert that customer. And not to mention the cost of auto dialers are significant. That's the one thing. But we've always wondered, and the reason we've tested it 3 times is because, is there a way we can be more efficient and increase our conversions, with the implementation of them? And our tests just haven't proved that out. Like I said, our folks also found themselves drifting off. They were sitting back. We'd listen to the first few seconds of phone calls, and they would not know the customer's name when it had popped up, or they were engaging. You only have 3 seconds to get that customer to want to talk to you. And if you lose them in those first 3 seconds, you're done. And some of them it created really bad habits. And so the manually dialing, it forces you to lean forward. I mean, you are focused at all times of the day, and it just makes us hungry. And it feeds into the highly competitive environment that we have. So it's been a huge success for us, and it's not something I think we'll ever get away from at this point.
To summarize, it's really by design that Royal United today is manual dialing. Can you talk a little bit about like the setup? So how does someone actually sit behind their desk, and how are they actually dialing? Are they punching in the phone number, or are they still clicking something? How would that work?
No, so our people, it's like a traditional, let's see if I can actually pull my office phone over. It's I can't get it to come over to pull it, but it's it's a traditional phone that's got like a back that sits it up at a 45-degree angle. And so what our people do, they take that back part off that props it up, and they put it face down. And a lot of them dial like this, and because they're faster, because they have 4 fingers at once, and that's how quickly can they dial that customer. So some of them duct tape it to their desk so it's right in front of them at all times, and they are just always leaning forward, shoulders forward, intensely attacking it. No clicking of links or like I said, auto dialing anyway.
Gabe, I thought you were about to hold up a rotary phone for us there. It's what comes to mind when we think manual. But it's super interesting. I hadn't thought about or heard much about the I guess the difference in terms of the person who's behind the phone and their level of engagement when auto dialing versus manual dialing, and how that the act of actually placing the call and proactively doing that might lead to more engagement versus kind of being reactive to the system placing those calls quickly. And it sounds like in your experience, you've found that the balance there, the improvement in terms of engagement outweighs any kind of performance benefits that might come with the auto dialing approach, and maybe not seeing as much of those either. I'm curious, I guess, Matt, to bring it back to you, kind of if your experience has been similar, or kind of how you guys have approached this topic with manual versus auto dialing, and if you're seeing similar things as Gabe, or if there are differences there.
Yeah, I mean, we don't dial fully manual. I think the big thing about our side is, and I think about dialing in general, right, is it's dialing is a by and large, it's a brute force activity, right? And I think on our side, similar, right? Every lead is a lead. We don't prioritize, we don't disqualify. We've tested over the years different things, from call cadence, number of calls, different things, and ultimately what we're trying to get to, right, is the value comes in when we get to the customer, not when we get the lead, right? So we want to do everything possible, but at the same time, one of the reasons we've made the focus on some of the branded content from a dialing standpoint and from an acquisition standpoint is, ultimately, right, if we can make less dials to get the same customers, it's more efficient, right? It's better for all parties involved, right? And I think it's a better customer experience, right? Meaning, I don't know that customers, we brute force dial, but I'm not sure how great of an experience that is for a customer over time, right? Especially as you get into some of the lower yield, shared leads, stuff like that, right? So, I think on our side, we're somewhere in the middle. We're not fully manually dialing, like what Gabe said, but I think it's been an evolution of a lot of tests and learning, and we've been dialing for a long time, same as everybody else. And I think it's trying to find the best way to get the highest level of customer engagement most efficiently to get to the outcome.
Yeah. So it's interesting you hit on kind of the combination of utilizing some manual dialing, some auto dialer dialing, and if you're able to share, like, how do you think about, I guess, where you do one versus the other, and is that driven by the type of consent, or is it more based on kind of the consumer's experience and then who you have on the other end, if it's branded or not? Or
yeah, I mean, I think for us everything's branded largely. I mean, we're not really doing much that's non-branded. I think that was a big switch right back in the Defenders days. When Bas talked about the change of TCPA consent, we made the determination to kind of make a switch to largely branded flows. But our dialing processes are the same everywhere. We don't apply different logic to one bucket versus another. So we're dialing everybody the same way from a technology standpoint and a process standpoint.
Matt, can you talk a little bit more about that? So you talked about the evolution of dialing, but there seems to be also an evolution of campaign strategies where that switch was made. Why was there a switch, and how did you guys do that? Because obviously that's a big topic where many companies are thinking about needing to make that switch either this year or definitely next year. if they want to interact with one-to-one consent?
Yeah, I think it's a couple things, right? It's not any one thing, right? But one is efficiency, right? Bodies dialing, it's a cost, right? So I think that's one reason. Two is we're and Bas, I know you've heard me say this before, right? If I dial 1,000 customers to get 10 customers, if I dial 500, if I dial 100, or if I dial 10 customers to get 10 customers, the highest ROI is in one-to-one, right? So as close as I can get to that from an efficiency standpoint, it's better for me and it's better for a value standpoint, right? So not just my margin, but it's better for the value of the lead side, right? Because the more efficient I am. So that's one thing. Two is just from a rep experience, but also a customer experience standpoint, I think part of it to me is what are the consumers looking for, right? And there's within any bucket of leads, I think there's only so many buyers, right? And that's what we're trying to get to, is we're trying to find the buyers within the pile, not the non-buyers, right? And so, what we've seen is largely as we've scrubbed down from going from, shared lead, multi-distribution lead, whatever you want to call them, down to a singular consent lead, we've seen the same number of buyers. Right? What essentially the process has scrubbed out is the non-buyers, right? And that's the other piece is the non-buyers are where the majority of the complaints or the issues come up anyways.
Super interesting. Thanks for sharing that. Gabe, can you talk a little bit about how Roll United has been doing this? Have you guys been focused on shared leads, and up till this point, are you guys focusing on acquiring shared leads, or has there been a bit of a shift towards going more exclusive?
Yeah, so we've always had a combination of shared, and exclusive leads, but we had never ventured into branded campaigns before. We don't have a brand. Most people don't know who Royal United is, and for anybody who's been doing this for a while, over the last 10 to 15 years, expenses have gone up dramatically while revenue hasn't really followed, and so we've always just tried to maximize our spend and go after what we know are very predictable conversions. And because we had never gone down a branded path before, we knew exactly if we spend X amount, we know what we're going to get in return, because it's highly predictable. And if we ever wanted more, we would just spend more and you would have the exact same conversions, for the most part. So while it's always something that I wanted to do and go after more of a branded campaign, I was afraid of the cost and just the unknown. And so, one of the big, initiatives for me and my team this year is changing that and reallocating, our budget to go after a branded campaign. The catalyst is certainly the new rules that are going into effect. While we know we're still 100% compliant with them, it's just taking some of that control back and that reliance on others away and putting it on us. And we're big believers in, control what you can control. And so let's go after this. And, we're banking on the fact that it's actually going to convert better, and it will be just as predictable as what a traditional campaign is, or a shared lead or exclusive lead campaign is that we've been using, but it'll be even better. And so that's what we're doing, and we're really excited about
it. That's great to hear, and it's great that you're, I think, getting ahead of the curve on that and making that shift. I think one of the big fears that we're hearing a lot related to these changes is the fact that the calling party, often the brand behind that call is going to be listed on the website, needs to be named, and so we're going to head towards an environment, I think, where the brand name actually matters more than it ever has in the past in terms of the consumer's conversion on that publisher's website page. That hasn't been the situation historically, right? The publisher could control the consumer experience and try to convert that person and get them to submit their information as a lead without having to rely on the consumer's association to each of the brands that they're eventually going to be matched to on the back end. And so with more of that, there's a fear, right, that it becomes more difficult if you're a brand that's less well known to the consumer. But it sounds like you're kind of getting ahead of the curve on that and starting to get to get more budget allocated towards those types of flows to see how it works and prepare for it, which is great. I was curious to follow up on Gabe on the way I guess you've thought about consent thus far, and if that's shifting or changing here, because it sounds like you've kind of mitigated risk on the back end in terms of the dialing strategy by using a manual dialer, which puts an added layer of protection for you. But how do you think about the original consent on the other end of that? Are you getting express written consent, and will you try to get one-to-one consent, or are you kind of relying on the manual dialing strategy as a way to not have to worry about that because you're not using an auto dialer?
Yeah, good question. I certainly think the manual dialing helps, but we don't want to be reliant on it because even if you have express written consent, which we do, to answer that question, we get it on every lead, and I'd say we don't move forward with a lot of lead providers because they can't prove to us that they have it, and that's something we do not take chances on. We're as conservative and risk averse as it gets, because it just takes one suit to take you down, and we don't have the budget like some of the bigger brands do to handle that. So we're very risk averse and only do things by the book, but we also know that that customer can revoke that consent at any time. And so that is something we are pounding into our people's heads. They have to pass tests every single week. They get it communicated every single week. We have messages that go out on a daily basis about what exactly is revoking that consent and what rules we have to follow. And let's always err on the side of caution to ensure that we are compliant. So I'm really proud of how our people handle it.
And one thing I was just going to, Gabe, one thing I was going to add, right, is just to be clear, right, because you said some of the bigger brands, I would say that's one of the things that, ADT, we have talked about what is ADT's tolerance for risk? It's 0, right? Because the value of the risk correlated to the value of the brand, there's no interest, no appetite for it, right? And so that's why even with a brand legacy like ADT, and all of the history that ADT has, and all of the the dialing and the customers and the 7 million customer base and all those things, there's still we have no appetite for risk, right? It's so for us, it's all of these things are mandatories and costs of doing business to maintain the brand legacy and the interactions with our customers that we want, right? And so I think that's and ultimately it's what the consumer wants. I think that's part of it, right? Is the consumer wants to meet us how they want to be met, right? And I think that's where our focus has been over the last few years, is on trying to meet the consumer that way. And our feeling was that a consumer submitting a whole bunch of submitting to get a whole bunch of calls or texts or emails wasn't generally how most consumers wanted to be met. Some people may submit it that way, but it's not really their ideal thing.
Matt, can you share a little bit about you mentioned the shift from shared to exclusive category lead to a branded lead. For the companies that are joining today's session, can you talk a little bit about the efficiency gains that you've seen in the chains from a shared lead to an exclusive lead to a branded lead? And before I give it up to you, I actually want to ask everyone, dump your questions in the chat. We're starting to get quite some questions at this point, so we're going to get to them, but feel free to engage with questions in the chat. We definitely want to make this as interactive as possible. Well, go ahead, man.
No, I was going to say, I think we see 3, 4, 5x yield on web leads, right? Making the switch from a shared to a generic lead, right? I'm sorry, from a generic to a branded lead. That's not at one point in the process, that's at every point. What I mean is that's in our dial to someone picking up the phone. We have someone that dials and then they transfer the call to someone else who closes. So we see a gain in that part of the process in the transfer. We see a gain in the closing part of the process on the back end. And so I think it's for us, it's been gains at every step in the journey, right? Which and I think the other thing I'll just say is it's a better experience for our reps that are doing the dialing, right? They get more yield, more contacts, better transfers, right? So it's also a better experience on that side, right? On top of just the consumer experience.
Thanks for that. We got a clarifying question, Gabe, for you from Joe. What does Royal United mean when they say manual dialing? Which dialer are you actually using when you're referring to manual dialing?
Yeah, we don't use a dialer at all. It means that we hit the buttons with our fingers. And that's manual dialing for us.
As straightforward as it can be. But how do your loan officers see these leads popping up? So they're using a CRM, and they're literally in the CRM where they're going through a queue, or?
Yeah, so it's in an open lead queue environment where, again, as long as they're permission from a state perspective, and we meet all those requirements, they have access to those leads. And then we do have an API integration with our phone system, so it can track dials and with it and make sure that it is protecting that customer experience. And to provide the best experience, like Matt said, for our people. I mean, we don't want the customer, getting over dialed. We don't want our people wasting their time dialing over each other at the same time.
Understood. Thanks for sharing that. Matt, you talked a little bit about the experience for consumers in terms of where the industry is heading, but you also talked about the experience for all of your people that are on the phone. Can you specify a little bit more what campaign strategies ADT has been testing with to also give a better consumer experience? Do you give the consumer the option today to actually decide how to interact with the brand throughout the sales process?
Yeah, I always reference, right, way back when, right, everyone used to just have a phone number on the website, right, and that's where we started, right, and then we added a web form, and that gave the customer one path of interaction, right, and we've continued to try and evolve there, right, because there's customers. Again, I said it earlier, right? We want to meet the customer how they want to be met. So some people may want to fully purchase online. Some people may want to submit a web form. Some people may want to call and talk to someone. Some people may want to submit and schedule an appointment online for someone to come into their home, right? So we try and offer as many different paths. Chat is another one, right? As many different paths for a consumer to interact, get their questions answered, and funnel towards a purchase. That works, right? Beyond just a web lead, right? Because I think that's, the important thing is there's hopefully conversion benefit and some degree of lead volume incrementality by having different options, right? And conversion benefit's the best part for us, right? That's what we're really shooting for, is conversion incrementality by deploying a ton of different tools. And it requires a ton of testing, right? Because everything doesn't work the first time. I wish it did, but it doesn't.
Usually doesn't.
So real quick, I want to acknowledge, I think we got 2 or 3 questions that have come in that we're not jumping into yet. One of them was related to aged leads and the impact on kind of leads in 2025, maybe that were consented and gathered in 2024 or earlier. Another one was related to kind of the brand name parent company versus the actual dealer level or agency level as a subsidiary. We're saving those because we're gonna come back to you guys, I think, in the follow-up session with a better detailed explanation there, with some input from others in the legal community, so that we're not giving you guys anything that's off base here live, but not ignoring the questions there that have been coming in. One other question here, really for both of you, Matt and Gabe. So Matt, you talked about the shift towards more branded, more exclusive leads and campaigns, and I assume there's been pricing changes as a part of that, right? The price of a shared lead versus what you pay or willing to pay in an exclusive or branded scenario. That backs into the difference in conversion and performance that you're experiencing from the agents. I imagine there would be similarities there, Gabe, as you're also thinking about starting to run some of these branded exclusive campaigns and seeing differences in the economics around it. Can you guys each just talk us through how that's shifting and how you're thinking about pricing changes and what you're willing to pay under those different scenarios?
Yeah, and I always think through the lens of this, right? Which is there's not actually a value to a lead, right? The value is in the customer, right? And the more efficient path we have to get to that customer, then that's going to drive, the value of a lead could be zero, it could be the value of a customer, right? If it's a one-to-one, right? And so for us, it's, trying to work through that to ultimately pay the right amount for the right traffic, right? Whether that's, and that applies to our internal stuff like paid search, or it applies to, our through third-party leads, right? Is ultimately what we're trying to get to is, associate an outcome to the conversion journey, right? From a yield standpoint back to the actual lead process, right? And so, I think overall, it's not rocket science, but I think efficiency in the process is a good thing for all parties involved.
Yeah, I echo a lot of what Matt says. I mean, I am concerned that costs are going to go up. I mean, that's my initial reaction, was that the costs are going to go up, and that would adversely impact our company. But ultimately, I don't really care what the cost per lead is, whether it's $100, $1,000, or $1. To me, it comes down to what those conversions are, and what's my cost per funded loan, and what's my revenue per marketing dollar spent. And between those, two metrics, it really doesn't matter. So if going to a branded campaign, which is what our bet is, it will increase conversions, like what Matt said it has for them, then I have no issues with the lead cost going up.
There's a question that actually came in around the yield being better for ADT, but how much it actually impacts the cost to generate a lead as well, and the ROI around that. And there's maybe a nice case study that we can share next time from our end as well, with a little bit more specifics. But what we've seen through PX with partners that are running vertical specific campaigns versus client branded specific campaigns is that the cost of generating the actual inquiry, the cost of generating that particular lead, is not per se much higher if it's actually branded, surprisingly enough. And especially if you think about placements on Meta or long tail search, if you actually create the right funnel in getting that consumer to click, and it can be a branded campaign, but it can also be a generic campaign, and then from there on lead the consumer into more of a branded experience, it does not need to mean that the cost of generating that particular lead is much higher than previously. And I think that's definitely an assumption that we see in the market often. It's definitely something that we have time, and as an industry, if you're generating leads today, to definitely test as well. And we're seeing a lot of partners that are starting to test a lot of different strategies around vertical focused leads that are generically branded versus branded leads, and see what the yield changes on those are from a conversion perspective, which ultimately, hearing Gabe and Matt talk, should reflect in higher lead prices.
Hey, Bas, I'm curious on that one. Like, it makes sense to me that the cost of generating the lead might not necessarily need to be higher, but is it true that the margin, or the profit margin for the publisher generating that lead, is inherently lower if they're monetizing it only one time after generating it that way? In other words, like, the cost could stay the same, but if they're only selling it to one party instead of 5 because it's exclusive, I guess, unless the price from the buyer on the buy side goes up to make up for that at the same level, the margin is getting compressed, or is that not the right way to think about that?
And I'll answer one thing on that, Eli, right? Which is, ultimately within that pool of shared leads, there's still the same volume of buyers. Buyers are what is driving the value, right? It's not the actual, meaning if I'm buying essentially a quarter of a lead, or I'm buying all of the lead, at the end of the day, there's still the same volume of people that are going to be transacting within that bucket, right? And oftentimes we've seen that when we flip to branded, it's not only is it the same, it's higher, right? You have a much higher intent consumer, so you have more buyers within the branded pool. So it's not only am I getting the value, the sort of combined value of the purchasers within the shared lead that I was getting before, but I'm actually getting more, right? Which translates back to lead value.
Yeah, so if we're talking about margin dollars, I actually think, Eli, the answer is pretty simple. If you have a well-optimized campaign that's working well on the branded flow, the dollar amount per lead generated is going to be significantly higher. And we see differences anywhere from 3.5x all the way up to 5+ x on what that means. And obviously, if it's a strong brand that has somewhat brand recognition, and I see some questions around brand recognition coming in as well, but if there is a strong brand recognition and there's an optimized sales flow on the back end, if that lead is 3.5 or 4 times higher priced, it doesn't mean that you're making less margin on it. Actually, the margin dollars are going to definitely be significantly higher on that lead in the same time as well. So I think that's definitely an interesting question, because I think there's an assumption that that's the case, right? That you can actually share the lead more times, and that down the line you're making higher margins. What we're seeing is that definitely not the case, because through PX we have been testing with different ways where clients can choose if they want to tap into branded or generic leads. And partners often prefer, like publishers that are generating the leads are often preferring to go the branded route already today. I wanted to come back actually on one question, because I see a question that just came in. Is the solution that you presented last session, this decision as whether a lead was exclusive or shared, left to the customer? As a bidder, how would you account for this? So I think what we're going to see today in the industry is that publishers are going to test with different flows. Not at all times do we need to give the consumer the option to actually select which brand they want to select with. I think a lot of companies are going to focus on that, but you can also auto select one company and show that company as an exclusive lead in the TCPA that is the highest bidder. And I think that especially around the testing, it's going to be crucial now to gain our learnings over the next couple of months to see what works best for both sides. Question from my end for the both of you, and I'll start with Gabe. How do you actually feel about these changes? Do you think they're good for the industry? Are they ultimately good for Roll United and ADT, you think, in the long run, by having these implemented?
I am actually excited for them. My first reaction was kind of fear of the unknown and what was going to happen. But I mean, ultimately, I know that from a customer experience standpoint, the biggest complaint we deal with is too many phone calls. But often those phone calls aren't coming from us. They're coming from all the other lenders that they were matched with, or the trigger leads that follow up after it. Then those, in many cases, what I think are deceptive practices that happen after the fact, to then engage those customers and represent them as though they're us or any of the others that were matched with them earlier in the process. And if this helps eliminate, some of that out there and to decrease the number of phone calls, I think it'll naturally increase conversions and be a better experience for both those customers, but then also our people who are on the phones every day trying to help the customer. So I'm excited about it. I'm a generally optimistic person who think would rather choose to believe it's going to work up until I find out that it doesn't. And so, yeah, I'm really looking forward to it.
Matt, same question to you. How do you feel personally about it? How do you think, looking at the industry, is this a good change, or will it also bring a lot of challenges down the line?
I'm actually optimistic about the change, and I'll tell you why, right? Which is, every year that's gone by, it gets harder and harder to contact people via phone that have submitted web leads, right? And I think one of the reasons for that is, and I'd say this, there's also consumers who are balking at the point of web lead submission. So when we present them with flows with the web lead page, you see more abandons every year, right? And I think, I'm hopeful or optimistic that one of the reasons for that is people are, wary that they put their phone number out there and they get infinity calls from infinity different numbers, and they don't know where it ends up, right? And that one of the outcomes of this process, I'm optimistic, is that, essentially consumers answer their phone more, because fewer people are calling and they know who those people are, and they have a clear expectation that if I give my name and number out, I know that one person's going to call me, right? I think, time will tell if that's the case or not, but I think, we know what the current trajectory was, right? Which is, every year going by, fewer and fewer people answer the phone when you call them. We talked about that even with branded web leads that we have across our ecosystem, right? When a consumer fills out web forms and says, I want ADT to call me, a large percentage of them still fail to answer the phone when the caller ID says ADT, right? And our hope is that, part of the reason of that is, people just don't answer the phone on web leads, right? And hopefully this clears up that process, right? Makes it a little bit better. But, overall, I think, for us, we do have the advantage of some brand legacy, but I think our feeling is that, continuing down the road of branded web leads, multiple conversion experiences, right? So continue to offer the customer the option to call inbound, as an example, right? E-commerce options, other sort of digital fulfillment journeys, right, is the path that's going to ultimately pay off, right, is giving the customer the option to interact with us how they want, when they want, to get the conversion that we want. So
that's great. Well, and I think you both hit on a key point there, that if consumers know who's calling them and that expectation is set, that should be a better experience for them, and also better for the calling parties at the end of the day. So the intent is definitely there for this to be a positive thing and a positive shift for consumers and for the industry at large. I'm curious, from both of your perspective, like if you had to, I guess, identify or highlight one thing that you think is kind of the biggest challenge or your biggest fear with this, as you're looking out at the next few months and then to 2025, once we get through the actual date of change there, what would that be, or what are you thinking about as biggest challenge, biggest fear related to the change?
I'll share. My biggest concern with the change is just anytime there's a new law like this, how they go about testing how that law is interpreted in the courts is typically through lawsuits, and it's just having to deal with a bunch of things that take away time and money from our business to focus on, what kind of litigation comes up out there that is doing nothing other than, I guess, test the courts, so to speak, in their interpretation of it. And that's my biggest concern, because it's a distraction and doesn't do anything positive for us.
yeah, I'd agree with that. I'd say, typically more legislation equals more, more complaints, even from legitimate dialing, right? So I think that's one risk. And then overall, right, one of my concerns is that, consumers will just be less apt to submit web forms, right? And I think, that's where, to me, continuing to build process to give the consumers other fulfillment journeys is so critical.
One more question, and we'll make sure that this is the last question. And I'm going to ask this question to Matt. Talking to a lot of parties in the space, I think one of the bigger scares of companies that are generating leads today on the publisher side is that brands are thinking about taking budget away with the uncertainty what this might bring down the line, and that brands might focus much more on taking control on running their own internal campaigns, and actually shift smaller budgets towards their partners. How are you thinking about it? And I'm hoping for some positive
Yeah.
ending. So no
No,
no doom scenario, please, in
yeah,
that answer.
I think, as we think about it, right, it's, we always have places internally that we can spend money, right? There's infinity options, right? What the value of partner lead programs are that they deliver consistent yield, right? And I think, that, to me, this instant in time doesn't change the equation, right? I mean, that equation and that calculus happens all the time, every day, irrelevant of any change in TCP. I mean, I always have more places I could spend my money than money to spend, right? And I'm always having to make the decision on, what are the right places, what provides the yield, what provides us the customers we want to get. And to me, that won't change through this, but what it does reinforce is the importance of, aligning, we want to drive to value and customers as opposed to lead volume, because, the one thing that I can guarantee you will drive us away from partner lead gen is, one, risk. So non-compliance issues, TCPA violations, stuff like that. Again, no appetite. We talked about that. And two is, if there are better or more efficient ways to get customers, or if the cost to get customers through third-party lead channels becomes, wildly inefficient, that also doesn't have appetite, right? But today, I think that's why it's important that we, find those solutions to get customers that convert and work well through the channels and maintain, sort of good compliant practices, because, as long as we have those two things, I don't have concern, right?
Super interesting, and I couldn't close out on a more positive note than Matt just summarized it. So to give a short, tiny little recap, but we'll definitely do that in our fourth session. What we heard in today's session is that, one, brands are looking at it actually with a pretty positive angle today. There is an infinite budget with ADT, so let's definitely all focus on fulfilling that. And more so, this will definitely drive innovation in terms of getting better customer experiences in place. And I think that's a major opportunity in terms of an industry that we can shift more towards too. So thank you, both Gabe and Matt, for your awesome feedback and answering of questions. I know we rapid fired at a certain point during this session, but thank you so much for your input. And thank you for everyone that joined today as well. We had a lot of questions again that were unanswered. Our apologies, but we're going to make sure that we're bringing those back in session number 4, day to come. And we're also thinking about hosting a session all together at LeadsCon to discuss this particular topic. More to come on that, but we actually wanted to make it interactive in getting a group of people together and spend 30 minutes to an hour to discuss this and to make sure that we're working together as an industry to navigate through these challenges. But maybe we should rephrase the word more so to opportunities, because I think that's really the takeaway of today as well, that all these changes are going to drive major opportunities for the players that jump on it. So thank you, Gabe, Matt, and thanks, Eli, for being my partner in crime again today. And we'll see everyone very soon.
Thank you all very much.
Thanks, guys. Bye.